if you look at the stock market, S&P down over 20%, NASDAQ down over 30%, Bitcoin down. I mean, I don't even know what Bitcoin's down since the beginning of the year, but it's got to be close to 50% at this point. I will gladly take something that sucks ass if it keeps my money stable or gives me a small gain when all that carnage is going on.
Right. I mean, moving on to gold, and we'll finish the segment here. Gold, as you know, has been flatlining this year as well. It's very briefly touched the $2,000 an ounce level, but it hasn't sustained that level. So I'm going to start with this viewer question or feedback, whatever you want to call it. This is by Big Shark LLC on my Twitter. He says, gold sucks ass. That's not a question, but ask it anyway.
Yes. So I guess my response to that would be gold is green for 2022. It is up on the year. Here we are halfway through the year. If you look at the stock market, S&P down over 20%, NASDAQ down over 30%, Bitcoin down. I mean, I don't even know what Bitcoin's down since the beginning of the year, but it's got to be close to 50% at this point. I will gladly take something that sucks ass if it keeps my money stable or gives me a small gain when all that carnage is going on.
Right. I mean, if gold sucks, what's everything else? Gold levels, what are you projecting for the rest of the year then?
Yeah, I continue to be bullish. We're still holding the breakout here. You guys can see this on my chart here. So again, we had the breakout. We had the beautiful double top here. We've now retraced to the scene of the crime. I think gold is getting that ready for its next vertical move here. And I think by the end of the year, we should be well above 2,000. I think I had a $2,400 price target by year end. I'm not sure if that's going to hold true, but again, we'll stick with it at this point and we'll kind of revisit it later in the year.
Okay, so just to recap then, last year, you had said that gold will be the best performing asset this year. So far, again, you're right. Gold compared to Bitcoin and stocks, that is. I'm assuming you're sticking to that call then, right? We're 6 months in and you're projecting gold to go higher and everything else to go sideways and down.
Yeah, in the race, this horse is far, far in the lead, so okay. I got to stick with it.
Let's finish there on the crypto side. Let's touch on stocks now, and then we can wrap up with gold right after this. Stocks, you said that the stock market decline that we've seen isn't going to see a recovery until several years later. I think those were your words. Now, I wonder what you're basing this on, Gareth, because if you take a look at the past bear markets that we've had or major market correction, let's go back to 2 years ago during COVID, then to 2008, then to the tech bubble bust of 2001, 1991, 1987. All of these 5 crashes I've talked about were followed by a major, very sharp V-shaped recovery. It was only, I can only think back to the 30s after 1929 when the S&P 500 decline fell about 80%. It didn't recover until 1950s. That was when the S&P recovered to its pre-depression highs. But we know that the 1930s and the early 40s were marked by a Great Depression. And it wasn't until World War II that the U.S. came out of a Great Depression. So that was only the last time that I can think of that the stock markets in the U.S. flatlined for many, many years. Are you saying that we are entering a similar situation now when we have an economic stagnation that will bring about the stock markets flatlining? Because that's the only scenario that I can think of.
Yeah, so that is kind of what I'm thinking is that, especially if you go the last 20 years since the dot-com collapse, the reason we've recovered so quickly is because of stimulus, right? Every time, especially starting in 2008 and 9, the Federal Reserve printed an unprecedented amount of money, obviously culminating with the COVID collapse in March of 2020. So that's been why this market has been kept on life support for so long. The economy has been kept on life support is because you have this stimulus. It then triggers the retail kind of consumer, right? We always hear about consumer spending, and that's been what's driving this market. So my fear is that with inflation being stubbornly high for a period of time, it's not going to allow the Fed to significantly print. Now, as I said, I still think they're going to start again at some point when when unemployment gets to a certain height. But I don't think they can print to the same magnitude. And that makes me worried that we pulled a lot of the gains forward over the last couple years since March of 2020. And it's going to be kind of this stagnating economy, stagflation, where the market is kind of, you get this 0 to 1% growth in GDP. And without stimulus from the Federal Reserve, there's just no way to get us back to these highs. You're not going to have the earnings growth. You're not even going to have earnings growth, period, to get us back to these levels. So I think it's going to be a long trek here. Things have made a major pivot because of the inflation surging to the upside. And it's going to be a tough market. It's going to be a trader's market going forward for quite some time.
Okay. What are you doing in this market then? If everything's just going to be flat, how are you going to gain alpha?
Yeah. So when I say flat, it means that the market itself will kind of be choppy sideways, but you're going to have mini runs in there and mini collapses, right? So I think the best chart to look at is like, and this is kind of what I envision, right? If you look at the Hang Seng market, and I'll bring this up on the charts here. If you look at the Hang Seng market, we are actually still hovering at levels that we saw back in like 2000 and, really 2009. I mean, the Hang Seng market right now is still at those levels. And if you actually go to the weekly chart here, you can see that technically we are just above the levels we saw at the highs of 2000. So basically for the last 20 years, the Hang Seng has had big pops, big drops, but ultimately it's trading the same area it was 20 years ago. And I think that that's the rotation we're going to see. We're going to start to see Asia take over. We're going to see them starting to have their breakout. The chart on the Hang Seng is actually a bullish chart if it can break the upper trend line around 32,000. And I think that the US then will be mired in this sideways chop for quite some time. But again, in understanding alpha, there's always places to look, right? So you have mini bull markets inside of a longer term sideways channel. And you also have certain sectors. I mean, gold, I still think is a no-brainer. Bitcoin, when it gets down in this lower sub 20,000, starts to look attractive. You'll have certain stocks like automation names as they start to move to a more robotic kind of economy where there's more robots doing jobs and so forth. So there's always going to be a bull market. It just takes a little bit more work than closing your eyes and just throwing a dart at the dartboard to make money.
All right.